Hi, I'm Eric.
And I'm Dick. We are the Annuity guys.
Dick, so what'd you get your wife for Valentine's Day?
Well, Eric, I know what she wants.
She wants an annuity, right?
You're right.
See, I'm the king of the practical gift, you know? I've given my wife a screen door, a Fitbit, you know, I've gone...
Well, it's time for an annuity.
That's right. It's the practical gift everybody should be giving this
And
year.
she may not even know she wants it.
Well, are going to be flamed for political correctness?
Well, it's been working for Trump. You know, he hasn't worried about being politically correct, and it's working out just fine.
So this is all about ratings this week.
So really, folks, what Eric and I have to admit that this is not going to be the most politically correct video, but what we hear all the time from husbands about their wives is, look, if something happens to me, my wife isn't interested in handling what I do on the finances.
Yeah.
Now, it does work the other way, Eric. Sometimes there's husbands...
We are being stereotypical.
Yes.
But it's not uncommon that we have a lot of older gentlemen who have been used to taking care of the household finances.
Right.
And when we start to talk about, is it a good chance you're going to predecease her? Well, odds are
statistically.
So is she going to be comfortable managing the portfolio the way you've managed it?
And that's where the rub comes in, because typically there's one spouse or the other that's pretty much handled the finances. And if something happens to that spouse, the security of the other spouse is at risk.
Yeah. So we've talked about, so you typically have one household money manager.
Yeah, as a rule.
And so when we've talked about the concerns, a lot of these guys, and I am being stereotypical, these guys are worried that if something happens, somebody like an advisor is going to swoop in and
take advantage.
And
this is where, go ahead.
Yeah, a lot of times you have issues of you're later in age, so you've got some what are just called lack of mental acuity.
Yeah, cognitive
there's a good chance when you get up there, you're not going to want to start learning all these new tricks on how to manage accounts and such.
Right.
So a lot of these guys are looking forward a little bit and saying, hey, if I've got an annuity in place where I know the checks just show up in the account every month, it's exactly what she needs to do, and she won't have to worry about it.
Exactly. It becomes that set it and forget it type retirement plan. And it's not necessarily that, you know, the wife wants an annuity for Valentine's Day, but what she wants is security for her retirement. And an annuity helps to accomplish that in many cases. Let's just talk about why an annuity works that way.
Well, simplicity is probably the easiest thing. If you think of a standard single premium immediate annuity, it's one where you take a certain amount of dollars, you give it to the insurance company, and they're going to give you a salary, or a pension, personal style pension.
Your own personal pension.
For your lifetime.
Guaranteed as long as you live.
You know, you can obviously set it for whatever pieces you want. And
there's nothing you have to do but receive the checks.
That's exactly it. You don't have to worry. And I think for a lot of people, that's what they're trying to do. They're trying to eliminate that worry of running out of money. And, you know, what happens if the market corrects? What happens if something else goes, you know, and the economy goes in the hay? They want the simplicity of just knowing that these checks show up. You don't have to worry about manipulating interest rates or if the banks are raising CD rates. This takes all that out of play, and it just shows up every week.
Eric, I had a situation I'd like to share with folks, and this took place back at, you know, when we had the big financial crisis, you know, the Great Recession.
2008.
Yeah, 2008, 2009. I had a husband that came in, and his wife pretty much handled the finances. I mean, now he was astute, but she handled the investments. He was so concerned about the condition of the economy that he wanted her to have some annuities. And the whole idea of that was so that she would have that foundation in the portfolio if something happened to him. And he knew that he was probably short for time. So he really talked her into going with some annuities. It was against everything she wanted.
She's the money manager. She's the money manager in this case. She doesn't want to have to deal with, you know, annuities. That's you're going to take away my liquidity, my ability to be a millionaire or a billionaire.
Yeah, exactly. Her investments were working for her. She wasn't worried that the market was down a little bit. But because of the husband's insistence and, you know, her willingness to, you know, to work as
she at least compromised on this.
She compromised with a small portion of annuities. And, you know, he did pass. He passed earlier than she did. And, you know, those annuities meant more to her than probably anything else because it provided her that layer of income where she just knows that, every month she's going to get her check. She's also seen consistent increases, so her standard of living keeps increasing year after year.
So she had an annuity that had some sort of inflation hedge built into it. So
And right.
increasing income potential.
And then it's allowed her to continue to invest without worrying about, her living, because her living's provided for.
So we always say you can't really have your cake and eat it too scenario, but in this case it sounds like they had enough assets to take care of their foundational income, still have enough other assets available to continue to invest and grow those dollars. And so she could have that foundation taken care of. Her personal needs, she doesn't have to worry about ever again.
Exactly.
So, yes, you can go and have fun in the market. And when you're having a time where the market drops 10% in a month to start the year, you don't have to worry as much.
Well, and you had mentioned the immediate annuity, which is the simplest type of an annuity. And many times that does fit, the bill for what, solves the problem. But there's also the indexed annuity. And in the case of the person I was just referring to, that was an indexed annuity. And so it does give them control over their account value. They can actually see that potentially grow. And that can go on to their heirs. If they haven't used all the money. So that is one of those have your cake and eat it too type annuities.
And we should one of the things that we probably don't talk enough about it, when you use a fixed index style annuity and you're utilizing that roll-up guarantee, account ownership can have a certain amount of importance when it comes into it, because there's certain annuities that have spousal continuation built into them. There are certain other ones that those guaranteed roll-up accounts may not be able to be passed from one spouse to another. So that's one of the things.
You have to check that.
Yeah, when you're giving away this Valentine's Day gift, you want to make sure that you truly are, covering your spouse, especially if you're the account owner and you're counting on that that guaranteed roll-up and ratchet to help out in the future.
Because at times you want that. There's other times when you just want the spouse to be able to collect all the money safely from the annuity and then turn around and put it into another annuity that's going to give them a better payout.
And sometimes they want the flexibility of having both options.
Yes, absolutely. So is a Valentine's Day gift good for an annuity?
Just don't tell my wife, because she's getting one.